Hey, welcome to The Explainer. Today, we're going to tackle the language of financial markets. We're going to show you how to read the story hiding behind the charts using a really powerful tool, trend analysis.
You know, when you first look at these charts, they can seem like just a bunch of random squiggles, right? But believe it or not, there's a story in there. Trend analysis is what helps us read that story, showing us where the market's been and giving us clues about where it might be headed next.
All right, so here's our game plan for this explainer. First, we'll nail down what a trend even is. Then we'll get hands-on and learn how to actually draw trend lines. After that, we'll dive into how to read the three main types of trends, and we'll wrap it all up with the core rules that tie everything together. By the end, you'll be seeing the patterns in the noise. Okay, let's jump right in. Before we can analyze a single thing, we've got to get the foundation right. So, what exactly is a trend?
It's actually super simple. A trend is just the overall direction the market's heading in over a certain amount of time. Is it climbing a mountain, rolling down a hill, or just taking a stroll on a flat path? That general direction, well, that is the trend.
And this slide, it really boils it all down. It might look incredibly complex, but when you get right down to it, the price is only ever doing one of three things. It's either going up, going down, or kind of just going sideways. That's it. That's the whole foundation right there. So those three directions, up, down, and sideways, well, they give us our three main types of trends, the uptrend, the downtrend, and the sideways trend. And we're going to break down every single one so you can spot them in a heartbeat. So we know what a trend is, but how do we actually see it on the chart? Well, that's where trend lines come in. We're going to learn how to draw them and turn all that messy data into a simple, clear, visual guide. Drawing a basic trend line is actually a pretty simple three-step process. First up, you just need to find at least two major high points. We call those peaks, or two major low points, called troughs. Step two, you connect those dots with a straight line. Easy enough. And finally, you stretch that line out into the future. And that extended line, it becomes your potential roadmap for where the price might go. And check this out. Here's that idea in action. See how this one line connects all those low points at 1, 2, 3, and 4? This creates what we call a support level. It's like a floor that the price keeps bouncing off of, giving us that clear visual confirmation that we're in an uptrend. But we don't have to stop with just one line. Actually, when you start drawing multiple trend lines, you can begin to spot more complex patterns that give you even more insight. Things like channels and triangles. And here's a perfect example. On the left, you've got a parallel channel. See how the price is just bouncing between two parallel lines, like it's stuck in a hallway? Then on the right, you've got a triangle. The lines are squeezing the price into a tighter and tighter range, which is often a huge signal that a big breakout move is on the way. Okay, so drawing the lines is one thing, but what are they actually saying to us? Now we get to the fun part, learning how to interpret them as we dig into those three main trends. So what's the textbook definition? Well, an uptrend is simply a series of higher highs and higher lows. And a downtrend, you guessed it, the total opposite, a series of lower highs and lower lows. That clear structure, it's like the fingerprint of a trend. Take a look at this chart. This is your classic uptrend. You see that stair-stepping motion going up? Each peak is higher than the one before it. And just as important, each valley or trough is also higher than the last. This is the unmistakable sign of positive, bullish momentum. And here's the flip side. A downtrend is just like walking down a set of stairs. Each peak is lower than the last one, and every trough drops below the one before it. The steady march downwards, that's your clear signal of a bearish market. And finally, we've got the sideways trend, which you'll often hear called consolidation. This is basically when the market just decides to take a breather. The peaks and troughs are all happening at pretty much the same horizontal levels. There's no real progress up or down. The price is just kind of moving back and forth within a range. All right, let's pull all these ideas together with some core rules. Because having a framework, having principles to follow, that's what makes this real analysis and not just random guesswork. These are the key things you've got to remember. I want you to think about trends like those Russian nesting dolls. You've got the small ones, the short-term trends, they fit inside the medium-term trends, and all of those fit inside the big one, the long-term trend. Now, that big long-term trend, it's the boss. It sets the main direction, but, and this is so critical, any major change in direction always starts with the smallest doll, the short-term trend. And that leads us to a really simple but powerful rule.
The longer the time frame, the more that trend matters. A trend you see on a weekly chart carries way more weight, way more significance than a little blip you see on a 5-minute chart. That big picture provides the most reliable context.
And look, if you only take away one single thing from this explainer, please let it be this key insight. Because the market is dynamic and evolving, trend lines and channels must be continuously adjusted. This is not a set it and forget it kind of tool. The market is alive, it's always changing, and your analysis has to change and adapt right along with it.
And let's not forget why we're doing all this. What's the point? Well, the ultimate goal here is to use these lines and these patterns to make better, more informed decisions. They help us anticipate where things might be headed and spot more strategic moments to get in or get out of a position. So, there you have it. We've covered the what, the how, and the why of trend analysis. You now have the foundational tools to start decoding the story in any chart you look at. So the only question left is, what trend will you discover?